And the Federal Reserve will decide on Wednesday if it will continue to raise interest rates. And when you set all of that aside, there's still a major question hanging over the financial system involving your money. Should all of it or just some of it, as it relates to bank deposits, be protected? Joining me now to discuss is the finance professor at USD, the University of San Diego, Dan Roccato. Dan, thanks for joining us.
Hey, Blake, thanks for having me.
So let's get to the issue of FDIC insurance. We saw Silicon Valley depositors made whole, Signature Bank depositors made whole. The question now is does that essentially say this is what the federal government is going to do going forward, or are we going to take this on a case-by-case basis? Elizabeth Warren, the senator from Massachusetts, was asked about this today, and here's what she had to say. Get your reaction on the other side.
2 million? Is it 5 million? Is it 10 million? Small businesses need to be able to count on getting their money to make payroll, to pay the utility bills. Nonprofits need to be able to do that. These are not folks who can investigate the safety and soundness of their individual banks.
Where do you think this is headed?
Yeah, well, the senator's not wrong. There is a lot of uncertainty, and that is a good question of how much is the right amount. And I know there's other politicians talking about perhaps raising that limit, which I think hasn't been raised, Blake, since 2018 or something like that. But and it has been raised through the years, as you know. So that's a good debate to have. A bunch of mid-sized banks have actually said, look, let's, for at least the next 2 years, guarantee all deposits and charge the banks an extra fee to do so. Now, to me, that makes a lot of sense. If the banks want that insurance, let them pay for it.
Now, it does make a lot of sense. I was talking to someone today who floated that exact idea behind me, and here's what I said. You know how things work in Washington. You put something in place temporarily for 2 years and see you 20 years down the road, right? I mean, that's the way that would work, would it not? Or am I wrong?
No, you're absolutely right. But I think the idea has at least enough merit that we should be talking about how can we safely protect depositors, but at the same time, not create this moral hazard, this unlimited backstop, if you will, by at the end of the day, taxpayers. And I think one of the ways to do that, having said that, I've been on the boards of banks, so I have some experience with banks, and I can tell you, they're in this to make money. And if they pay that insurance premium to the FDIC, go out and market that and say, look, we have paid extra premium. That gives you extra comfort. That could also be a pretty clever marketing tool.
But doesn't it also, if they pay that extra premium, right? And this is the tricky position. I'm not saying there's a right answer or a wrong answer. Because you want people, when you put your money in the bank, you know you got to be able to get it out, whether you're an individual or a business, right?
Yeah.
So if you raise the cap, and you say, the banks which pay these fees, the insurance, they're going to pay more fees, you know what's going to happen. The banks are going to say, well, that fee that you have, that's now a little bit more. And on and on and on.
Yeah. That's how our system works, Blake. You said it very well. I think you should be a regulator in Washington.
No. Hard pass, the hardest of passes, I promise you.
You're absolutely right. Listen, at the end of the day, that cost is going to be paid by the customers. There's no doubt about it. But I think there is some merit in having that discussion about what is the right limit. How do we, maybe now's the time to tweak that a bit, because what we see now is basically a lack of confidence. And confidence is the glue, as you know, that holds this system together. So at the end of the day, we need to rebuild that confidence so that you and I and 330 million others feel good about putting our money in the bank rather than burying it in a hole in the backyard.
Speaking of confidence, and lastly, real quick, the American public by and large isn't really confident where the economy is. And the Fed now has a pretty big decision as to what it does on Wednesday with raising interest rates. Rates go up, borrowing costs go up. We all feel it. Where do you think this goes from here?
I think they will raise rates a quarter point. That's my guess. And listen, the ironic thing here, Blake, and it's kind of interesting when you think about it, is the Fed for the last year has tried to slow the economy and really push us into a recession with raising interest rates over the last year. They haven't been able to do it.
Right.
But the crisis that started last week, that might just do it.
All right. You think it raises by, you said, a quarter of a point.
I think there's about a 75% chance.
Yeah, and after that, is it an end? Are we pausing and the American public can breathe a sigh of relief at that point that mortgage rates will come down, auto loans will come down, debt that they hold will come down, et cetera?
Well, I think we have to be careful what we ask for. If they pause it at that point, it could mean that it's indicative of a bigger issue, which is that we've run the economy into a ditch. I suspect they're going to raise it this week. I wouldn't be surprised if they hold the course for, hold it there for another month or two, see, kind of get the temperature read. But we're not out of this inflation thing just yet.
Yep. All right, Dan Roccato, got to leave it there. Thank you for joining us tonight.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.